Tomorrow we have United Technologies, Verizon coming out. In the following day we have Microsoft and Intel, and then Amazon, and then Google. To top the week, we have GDP numbers coming on the economy. It's not going to be the 4.1% we expected to see, but it's going to be pretty strong. I think we are looking at a number close to 3.5% for the third quarter of 2018. We have some interest rate meetings in Europe on Thursday. Their Federal Reserve is getting together, and I think they're going to mention that they're going to stop purchasing bonds there, like we used to do here in the US. And I think the next step will be walking away from easing monetary policies, meaning start talking about maybe even the end of next year to maybe normalize their interest rate environment and start maybe even raising rates there. The Chinese market is priced not bad to start stepping into this market as we speak. Now, we don't buy Chinese companies per se in Chinese markets. What we do buy is American depository receipt of Chinese companies. And the reason I do like the Chinese market is because only 3 times in the past 20 years the Chinese market was trading at multiples cheaper than the S&P 500. And this is one of these times right now as we speak. The market is not expensive, selling at 10 times earnings. You know, for this year, they're looking, I think, at 6.6% growth rate. Next year, 6.3% GDP growth rate. And even if you look, I think 5 to 10 years out, they can still continue growing most likely at 5% GDP growth rate, which means they are responsible for about 30 to 40% of the world entire growth. And stock market participation in China is only 4%. Only 4% of the individuals. It's mostly retail. And it is becoming, as we speak, slowly a domestically consumed economy. We now talk about trade surpluses with the US to the tune of north of 500 billion. It used to be a lot more than that. So over the years, we tend to forget that the economy was entirely based on exports. $505 billion trade surplus is huge, but it's a lot better than what it used to be 5 or 10 years ago. So they are slowly shifting towards domestic consumption like in the US. So 3 names come to mind. I'm just going to mention them briefly. One is Tencent. Half of the internet users in China spend their time on the Tencent platform. This is still the largest gaming company in the world. It's the second largest instant messaging company in the world with 1 billion users. They are selling today at about 25, 26 times earnings. Growth rates there are still, I think, about 30% a year. Another company to take a look at is Alibaba. One important thing to mention about Alibaba is that 80% of the world marketplace is really in the domain of Alibaba. And if they start cutting a coupon out of each transaction that goes on their platform, that is huge for a company like Alibaba. And the third company I want to mention is Baidu, the Google of China. That's another company selling today at about 17 times earnings, down substantially this year. Also, they own the largest video platform in China. Hello everybody, and thank you for watching our YouTube videos. If you like the content, please feel free to check our website at tamarsecurities.com. You can also call our headquarters in Woodland Hills, California at 818-914-7461. The highlight of the week for Tamar Securities and its affiliates, 911 Financial Services and Firefighters United, is that during volatile times as the one we are experiencing right now, please use dollar cost averaging as a way to put money to work consistently into markets to average out the volatility and take advantage of lower valuations.